Before we begin, I'd like to explain a few functions of the program that we'll be using for this webinar. First, as a webinar participant, please note that you will be muted throughout the entirety of this call. If you would like to submit a question, please type it in the dialog box to the right of your screen. We'll be taking audience questions at the end of this panel. However, I encourage you to submit your questions at any point during the presentation. Good morning or afternoon to all attendees. We are so excited to have you join us for today's webinar, Understanding and Measuring Your Customers' Financial Well-Being. We have some really great content to share with you today. A bit of a sneak peek into what we've been up to here at CFSI, as well as actionable items you can take back to your respective institutions to implement and ideate on further that can improve the financial health of the people you touch. This webinar is being recorded, and a link to access the recording will be provided to you after we conclude. I have the distinct pleasure of introducing my talented colleagues who will be leading today's discussion. Mindy Hauptmann is the Managing Director of Consulting at CFSI. Simply put, Mindy's a powerhouse with tremendous experience in banking and financial services. Notably, Mindy has joined CFSI after years in senior positions at TD Bank, including market research, product development, and strategies. Alongside Mindy is our Senior Director of Consulting, who really needs no introduction, Eliza Gutman. Eliza wrote the CFSI book on financial health, spearheading our consumer financial health study and working with in-market providers to build strategies that really move the financial health needle. I am thrilled and honored that both Mindy and Eliza have offered up their insights and perspective for today's discussion. Thank you both. My name is Brenton Peck. I'll be facilitating questions to our presenters today. Our hope is that you will leave this webinar with a better understanding of the state of financial health in America, what it means to pursue a financial health strategy, and why financial health makes good business sense. We encourage you to be engaged and ask questions throughout using the control panel on the right side of your screen. For those who may not be as familiar, CFSI, the Center for Financial Services Innovation, is a national nonprofit based in Chicago. Our mission is to improve the financial health of Americans, especially those underserved. And we do this by shaping a robust and innovative marketplace with increased access to higher quality products and practices. We also have offices in New York, Washington, D.C., and San Francisco. The organization itself began in 2004 with a purpose to shine a spotlight on the tens of millions of Americans who were falling through the cracks of the traditional banking system, the and the underbanked. Today, underneath each of our lines of business, we lead a network of more than 130 providers who are committed to improving the financial health of the people they touch. We work with a variety of organizations that are all advancing financial health, from the largest retail banks to innovative nonprofits to small and large fintech companies. Much of our work focuses on helping individual institutions designing and deploying high-quality products and programs through our consulting practice, taking ideas all the way to implementation. Here's what we have in store for you today. We will cover several topics, a lot packed into our short time together. First, we will provide an overview of CFSI's core research findings about financial health in America. We will spend the bulk of our time discussing approaches to and uses for the financial health measurement and why financial health measurement is a critical component of a comprehensive financial health strategy. Then we will share thoughts about the levers your business can pull to affect customers' financial health, concluding with an overview of how CFSI can assist you in these endeavors and by answering questions. Please feel free to submit your questions at any time by using the control panel on the right side of your screen. And make sure you're engaged, as we'll be conducting polls throughout the webinar. We're talking today about a big topic, financial health and well-being, and what it means to your business. I want to acknowledge our major sponsor, the MetLife Foundation, who continues to be instrumental in our continued work with financial health. And with that, it's my pleasure to turn things over to my talented colleague and friend, Eliza Gutman, who will lead us through financial health research and measurement. Eliza, the floor is yours.
Thank you so much, Brenton. Glad to be with everybody today. So we're going to start at the beginning. We're going to lay some foundational work, and then we'll build up from there and get more complex. So to lay the groundwork, let's talk about what is financial health. So at CFSI, we've defined financial health as the outcome that results from day-to-day systems that help you build resilience and pursue opportunities. And so there's really three key ideas here. Resilience is the first one, this idea, whether you can weather a financial shock or an unexpected emergency without having that derail your financial life. The second is whether you are well positioned to pursue your financial aspirations. So whether that be sending your kid to college, buying a home, starting a small business, retiring comfortably. And then finally, whether the things that you're doing on a day-to-day basis, both your own behaviors as well as the financial products and services that you use, whether those are detracting from or contributing to your ability to be resilient and pursue those aspirations. And so in 2014, when we developed this definition, we really wanted to understand what is the state of financial health in the country. And so we deployed a nationally representative survey to do this, covering a lot of ground, from financial behaviors, attitudes, product use, demographics. And then we had a huge set of data, and we wanted to know, how do we make sense of it all? How do we understand what's happening from a financial health perspective, and then how that financial health is intersecting with things like demographics and financial product use? And so we did a segmentation analysis, which was very focused on financial behaviors, attitudes, and circumstances. It was very intentionally not a product or demographic-based segmentation, which I think is likely common in a lot of your organizations. We really wanted it to be about financial behaviors and attitudes. And the result is what you see here on the screen, this 7-segment segmentation, which we then rolled up into 3 tiers: healthy, coping, and vulnerable. And taken together, the coping and the vulnerable segments, we frequently call the population that is struggling financially. And that comprises 57% of the national population, which is about 138 million American adults. And so this is a very, sobering number. And what it tells us is that this is not a niche problem, right? It's not isolated to the or underbanked. It's very mass market. And so to give you an idea of some of the data, and the white paper that's pictured here has a lot more than we can go through today, but just to give you a flavor, 43% of the population said they struggle to keep up with bills and credit payments to some degree. There's a spectrum in there. 31% said they could only make ends meet for 3 months or less if they were to experience a sudden drop in income. And 27%, over a quarter of Americans, reported having less than $1,000 saved for retirement, which is pretty much a proxy for zero because that was the lowest level in the survey. Unless you think those are all, sort of students or something, a very significant percentage of that group was in their prime working years. So this shines a light on the significance of the problem and how widespread the problem is. before we move ahead, I'll just say a couple of words on the coping segments, because this, I think, is a pretty significant opportunity for many of those who are listening today. Clearly, the consumers in the coping segments, they're in the middle here, right? They're not as vulnerable as their peers in the vulnerable segments. And what's notable about them is that they're very engaged financially. They over-index in use of traditional and non-traditional financial products and providers. They over-index in use of different kinds of channels, online, offline. And what that says to me is that they are working hard to cobble together a system that works for them, and yet it may still be falling short because we see that they are struggling with savings, with debt management, and in some cases, the tenuous segment here is also struggling with planning. And so I see this as a pretty significant opportunity for financial services providers to think about, in particular, serving this tier or this group of customers and thinking about how to help them move up in the financial health spectrum. So when we stepped back from this segmentation and we said, okay, we understand these behaviors and attitudes, we said, but how much of this is just a proxy for income? And so the first thing we did was we just looked at a simple 2-by-2 relationship. We graphed, income and financial health. And we in fact saw that there was a correlation between income and financial health, as you might expect, but it wasn't absolute. We actually saw that there were consumers across the financial health spectrum at all income levels. In fact, more than a third of those in the healthy segments have annual income under $60,000. So they're in the bottom 2 income quartiles. And then the reverse was true as well. More than a third, or 35% of those in the unhealthy segments had incomes in the top 2 income quartiles, or over $60,000 a year. So we said, well, this is interesting. Let's do a more sophisticated analysis. Let's do a regression, which essentially means we looked at the impact of each behavioral and attitudinal factor, as well as each demographic factor that we had access to, holding everything else constant. And what we found was that while income influences financial health, certainly, and you can imagine it's likely easier to engage in healthy behaviors if you have more money. So while that's definitely significant, what we found was that consumer behaviors, particularly planning and saving behaviors, also had a significant impact. And in fact, the predictability of those behaviors was stronger when you think about predicting financial health than the demographic variables. And so those results are what you see here on screen. Those who, for example, said that they plan ahead for large irregular expenses were 10 times more likely to be in a healthy segment than those who said they don't plan or they can't plan for some reason. And you see comparatively, we've got the saving behaviors in the next 2 lines, and comparatively you see annual income for those in the top income quartile, the predictability of that variable. And so what these findings suggest is that there's a really significant opportunity here for financial services providers to impact consumers' financial health if we can put high quality products and services in their hands that help them adopt and maintain these healthy planning and saving behaviors. So why should this matter, right? I mean, there's a significant opportunity here, but if we think more broadly, we just talked about the magnitude of this problem, right? 57%, nearly 6 in 10 Americans are struggling financially. And so it's highly likely that these are your customers. In fact, I would be shocked if you didn't have any of these customers amongst your customer group. And so you have a role to help them overcome this challenge and move up the financial health spectrum. Financial services companies are really ideally positioned to become financial health companies by providing these high quality products and services, experiences, and interactions that support customer success. And this transformation, going from being in the financial services business to being in the financial health business, requires expanding your definition of success to include positive outcomes for your customers alongside positive outcomes for your business. Pursuing a financial health strategy is a continuous improvement process. So if you think about the way that the medical industry thinks about improving physical health, it's an interesting analogy, right? So first we could say you diagnose your customer's financial ills. This diagnosis then guides you to design initiatives aimed at curing those ills. And then after delivering those interventions, you assess whether they're having the desired impact. And based upon that feedback, you go back and you think about how to further improve your offerings. So financial health measurement is not an end in itself, but it's necessary to begin diagnosing your customer's financial health and to develop an impact measurement or tracking plan. Just as healthcare providers couldn't design interventions to improve physical health without statistics that measure our vital signs, our survival rates, and the like, financial service providers can't design interventions to improve financial health without a similar set of metrics to know whether what we're putting out there into the marketplace is having the desired outcome. And so today, by being here with us on this webinar, you're really taking the first step in what we call the financial health journey. You're orienting yourself by beginning to understand financial health in America, and you're thinking about how it relates, hopefully, to your own business. And so for the remainder of this hour, we'll share information to help you move through the journey that you see pictured here. We'll discuss how you can diagnose your customers' financial health, how you can design and deliver initiatives that improve it, and how you can track the impact of these initiatives.
Hey, Lisa. We have a quick question here regarding savings behavior.
Sure.
When we think about a regular savings behavior, does that include longer-term accounts like retirements or contribution to 401ks?
Yes. So I think the question is about that indicator around having a planned saving habit. And so there were two things that were pretty significant predictors of financial health within the planning and saving. So planning ahead for large irregular expenses, that's going to be a much more short term, and it's actually more around known expenses. Having a regular saving habit can be for both long term and short term. And there were actually three things that were sort of aggregated into that indicator of a planned saving habit. One was having sort of an automatic, a certain proportion of my income is deducted every month and put into savings. And that could be for longer term savings, retirement, or it could be for an emergency savings account. And then there were two others. One was saving one spouse's income and spending the others. And the third one was spending regular income and saving bonus or irregular income. And so those were three different types of habits, saving habits that we aggregated. The first one that I mentioned was by far the most popular, and that would include both the short-term and the long-term savings. Hopefully that answered the question. If not, definitely follow up. Okay, so let's talk a little bit about the business case here, right? How do we think about the business case for financial health? Clearly, this is the right thing to do for customers, but how do we think about the benefits for the business? And there's evidence that a financial health strategy makes good business sense. Study after study demonstrates individuals aren't finding that their providers are giving them the advice and the assistance that they want. So I'll share with you a few recent studies and a few recent quotes. A GfK Personetic study of banks found, quote, weakening engagement and loyalty in no small measure because customers are not finding their bank helpful when it comes to improving financial well-being, end of quote. Another survey found, quote, Americans expect their bank to actively help them make better financial decisions, and most feel their bank is failing to provide it, end of quote. So there are many ways that improving customer financial health can have positive benefits for the financial institution. So if you think about things like increased cross sales, reduced delinquency rates, and reduced defaults, increased retention and loyalty, those will all translate and impact the bottom line. And to give you a sense, Gallup actually did a study where they quantify those loyalty-related benefits, and they found that customers who strongly believe their bank is looking out for their best interest are significantly more likely to be satisfied with their bank, more likely to consolidate their banking with that institution. So there you can think about the benefits of cross sales. And they're more likely to remain a customer of that institution. So retention, increased lifetime value, things like that. But the benefits go beyond increased customer satisfaction. We've seen evidence that financially healthy customers can be significantly more profitable than unhealthy customers, and that even small movements up the financial health spectrum can yield those profitability gains. So while financially healthier customers may generate lower fee income, they maintain higher balances, and even more importantly, they have the capacity to purchase more categories of products and services, especially as they become eligible for an expanded array of credit products, for example. Improving customers' financial health also leads to greater account longevity because of satisfaction and reduced involuntary account closures. And so the profitability benefits are amplified when we look at them from a lifetime value basis. And these are just the tangible, quantifiable benefits. If you think about, we're in a time right now where consumer mistrust is higher than ever. Financial institutions are facing intense scrutiny by regulators and consumer advocates. And so pursuing a financial health strategy can yield valuable reputational benefits. It can even positively impact your employee morale as they begin to feel genuinely gratified by the help that they're providing to your customers. And so at this point, we want to go to our first poll. You're all attending this webinar, which suggests to me that you have thought about addressing customer financial health, at least to some extent. And so at this point, we want to get a sense of where you are along the journey that we just outlined. And so take a couple of seconds here to indicate where you are on this journey, and then we'll look at our results and we'll think about what that means.
This is great, Eliza. Keep the results coming in. We'll give it just about 5 more seconds to collect some more responses. All right, let's close the poll and we'll show you the results.
Okay, so this is Mindy, and I'm going to take it over. Actually, I will say that I'm not surprised to see very few in that sort of, relatively few in that deliver and tracking piece, because we know that most organizations are at the beginnings of the journey. And so the fact that about a quarter of you are in the orient and align doesn't surprise me. I mean, that's probably at the beginning of the journey, and that's why you're all attending today. Frankly, I'm gratified to see that 26% of you said that you are in the design phase, because I think that's the most exciting phase of all of this, when you're actually designing initiatives that can improve financial health as opposed to just thinking about the problem. So that's wonderful, and hopefully we'll give you some insights that can help you as you design those efforts. So Eliza, thank you very much for that very brief overview of financial health in America. There's obviously significantly more depth behind all of that. Much of that research is available on our website. If you're interested in learning more, we have tremendous amounts of research out there. So I'm going to now turn to talk about financial health measurement. As Eliza said, measuring your customers' financial health is a critical step in this financial health strategy because it's the only way to understand if you are making a quantifiable difference in their financial lives. Through our financial health measurement project, CFSI has been working with a group of providers who are committed to operationalizing and testing various approaches and then sharing that information back with CFSI so that we can learn from it. We deliberately set out to include a diverse set of companies in this project. So we have banks, credit unions, lenders, prepaid card providers, and even one financial education content developer who is dealing directly with consumers, but they are dealing with institutions that deal with consumers. And so through this project, we're coming to understand best practices, challenges, and pitfalls around financial health measurement. Let's move to the next slide. So there are two general approaches to measuring customers' financial health. Customer surveys are a good starting point. They can be very simple to execute and still be quite effective, especially if you're seeking a holistic view of your customers that will encompass all aspects of their financial health. Survey data can be collected from a sample of customers through standard market research techniques, and that enables you to obtain an overall read of the financial health of your customer base. Or you can obtain survey data for individual customers, so either branch-based or online questionnaires. However, there are limitations to surveys, so we also recommend developing metrics that use transactional and other customer data as inputs. These data-driven metrics are objective, whereas survey data can be colored by respondents' perception. In addition, while survey data can only be collected periodically, data-driven metrics can be refreshed almost continuously, thereby providing you with a real-time view of progress. And lastly, data-driven metrics can be available for your entire customer base, whereas survey data, by its very nature, can only be obtained from a subset of customers, which could limit its usefulness for some purposes. However, as we'll discuss shortly, it can be quite difficult to obtain a comprehensive view of an individual's financial situation using only a single institution's data. In addition, these data can overlook factors that influence an individual's financial health, such as their social safety net. Therefore, we view the two approaches as complementary to each other rather than either or proposition.
Hey, Mindy, I've got a question here. How can institutions use the financial health score, I believe referring to survey data, on customers if those customers are constantly changing, say, due to attrition?
Right. So, and we'll get a little bit into that. So obviously, if you take a snapshot of your customer base today, and then you take a snapshot of your customer base in a year, you're going to be getting that snapshot on different people because you have a flow of customers in and out of the organization. So that sort of approach is not going to be able to tell you, customer John Doe improved his financial health. What that kind of approach can tell you is, in general, my customer base has better financial health than it had last year. And that, there is value in that piece of knowledge. We will talk as we go forward about some of the other ways and some of the other methodologies that can be used, because obviously just getting that single snapshot is only one piece of the puzzle. Okay, very good. So CSSI's approach to financial health measurement in general is grounded in our overall financial health framework. For those of you who are not familiar with the work that we've done around this, we really structure our view of financial health around 4 basic elements of one's financial life. There's spending, saving, borrowing, and planning. The financial health indicators that you see spelled out on the right-hand side of the slide were designed to help us understand in the most concise, basic way whether a customer is financially healthy. So for example, a financially healthy person spends less than he earns. A financially healthy person pays all of his bills on time and in full. A financially healthy person has sufficient liquid and long-term savings, and so forth. While there are certainly many other indicators that one might look at, this was designed to be a simple framework that could help us answer the question, what are the most essential elements that would help me understand whether someone is financially healthy or not? Can you move to the next slide? Great. So CFSI has taken this concept and we've developed a financial health score based on the framework. It uses data from a simple 8-question survey where each question aligns to an element of financial health to generate a score that ranges from 0 to 100. This yields a continuum of financial health rather than discrete segments such as the ones that Eliza described. In addition to the overall score, there are subscores for each of the 4 component areas: spend, save, borrow, and plan. These subscores provide useful insights into the specific needs of your customer base, which in turn provides insights into the business interventions and initiatives that can have the greatest overall impact. So for instance, if you see that your customers overall have are doing pretty well, there's a pretty high score on spend, but they're really struggling on the save component, that could lead you to say that you should be focusing your business investments, your new product development, and so on and so forth on savings innovation. Conversely, if you see that your customers are doing fairly well on the spend and save component, but they're struggling on the borrow component, then that would be a place to focus your attention.
Mindy, there's a number of questions coming in around the score, and I'm wondering if you'll get to this later, but are there financial health score tools that are available to the attendees of this call? And if not, what are some of the recommendations you would make in terms of measuring their existing customer base?
So there is the CFSI tool, which is currently available on a self-service basis to members of CFSI's network. We, as in the consulting practice at CSSI, have done quite a number of projects of this nature, and obviously we would be happy to speak with anybody about conducting an effort of this sort on your behalf. Other than that, if somebody wanted to go the do it yourself route, this is frankly a framework. There's no magic to it, especially if you're saying that you're going to be doing this on an ongoing basis. Just using a consistent methodology and framework can get you there from a, from the point of view of starting to track your impact over time. So moving on to metrics that are based on transaction and other customer data. So the benefit of these kinds of metrics is that they provide significant nuance. However, they are much more complex to construct, and they require a good deal of creativity in their construction. So similar to our financial health score, we've created a set of database metrics that align to the overall financial health framework. So for example, under spend, one of the metrics that we would want to look at is whether a customer spends less than he earns. And ideally, we'd be able to measure the difference between their income and their expenses, to measure whether they have sufficient living expenses in liquid savings. We would ideally be able to calculate the number of months living expenses that they have saved. So the challenge to doing this, of course, and I'm sure you're all asking this question, is where to find the data to populate these metrics. This is especially difficult since we know that one institution generally owns only a share of the customer's entire wallet. And so I don't want to pretend that this is an easy task, but a combination of in-house and purchase data can generate useful proxies. For example, if you are a bank that has checking accounts, data on transactions such as direct deposits and the checks, online payments, and debit card purchases that a customer makes can serve as proxies for earnings and expenditures. Savings and investment transfers or loan payments to other financial institutions can provide insight into office balances. And some sleuthing can generate useful insights. For example, irregular payment dates for recurring bill payments can suggest that a customer is struggling to pay bills on time. So this definitely takes some creativity, and it is definitely work where you need to accept that you will not have perfection, but you will have insight. To gain a truly holistic view of customers, internal data generally needs to be supplemented with data purchased either from account aggregators or from providers of geodemographic estimates. And there are innovators out there, such as Investment Yodlee, who have worked with CFSI to develop methodologies to calculate financial health metrics using the user permissions data that they aggregate, which they will make available to financial providers. And so we believe that over time, more and more of these metrics really will be available to purchase. Well, holistic financial health metrics that, as we've been talking about, are a lofty goal and have a specific use. More targeted metrics are easier to develop and in fact could be more beneficial in evaluating the impact of specific financial health related initiatives. And so let me give you two examples of what we need. Say you've implemented an automated savings program to encourage a regular savings habit among your customers. Your key performance indicators should probably include measures such as the percentage increase in savings balances or the average number of consecutive months with savings deposit among your enrollees. In this case, this data is easily tracked with data that you have on hand because we're talking about the impact of the savings program for your customers using your product. Another example, say you implement a secured credit card to enable customers to build their credit scores. You'll likely want to track the percentage of payments that are on time and in full, the change in the cardholder's credit scores, and the percentage of cardholders who graduate to an unsecured credit card in a reasonable time frame. Again, these are granular financial health metrics that are easily tracked with data that you have to help understand how well you're impacting the specific aspects of your consumer's financial health that this product can affect. Developing these metrics requires that you think about the specific financial health benefits that you believe will accrue from your initiative. And so especially for those of you who said that you're in the design phase of your financial health journey, where I think this is particularly relevant, we encourage your organizations to take that step and to think about the key performance indicators that reflect the financial health performance of your business initiative with the same diligence that you'll think about the key performance indicators that reflect its business performance. So getting back a little bit to the question that somebody asked before about, how these different types of metrics can be used. Financial health metrics can be used either at the enterprise level or at the customer level. Enterprise level data enables you to profile your customer base, evaluate them against benchmarks, and assess the nature of the financial challenges in the aggregate. And it really serves as critical input to guide the product development strategies, the channel strategies, and the messaging strategies that can have the most impact on improving your customers' financial health in the aggregate. Individual level metrics can be used to customize or enhance the customer experience. So for example, you can use targeted marketing techniques to present specific solutions to customers who would benefit from them, as well as provide individualized content or recommendations. In addition, these individualized metrics can become the basis for setting goals and having customers track their progress against them. And all of these techniques have been shown to motivate successful behaviors and drive lasting customer relationships.
Mindy, excellent. We've got a couple of questions here that Eliza alluded to a little bit earlier, but can you give some examples and maybe an illustration of where employees fit into all of this? Those questions seem to be coming from financial institutions. If you can add a little bit of color there.
Okay, so I could take that question to mean one of two things, so I will answer it both ways. So if the question is, what role can the employees play in helping to obtain and communicate these measures to customers, I think they actually have a very big role. So we have worked with organizations that are having their frontline employees who interact with customers every day administer these types of surveys to their customers, whether it's to give the customer an actual score or whether it's just to identify where that customer has underlying challenges. They really can be used to help guide that customer conversation in the right direction and to make individualized recommendations. So we think that that is an extremely useful tool, and would really love to see more organizations take the customer conversation or the customer interaction in that direction. The other way that I could interpret that question is around the degree to which we should be obtaining this information, not only about our customers, but about our employees, and understanding the state of our employees' financial health, which we often find in the work that we've done that generally the employees of financial institutions have financial health similar or sometimes more challenged than customers. And that it's very important for us to understand and help our customers, our employees, improve their financial health, because if they're going to be the ambassadors of doing this for their customers, they need to understand it and feel supported in it as well. So I hope I might have answered more questions than the questions actually meant, but I hope I answered the question in either case. Okay, so I think we are ready for our next poll, which is, that's the poll. Have your companies attempted to measure customers' financial health?
Excellent. Poll is live. People are submitting their responses. We'll give it about 5 more seconds here. Okay. close the poll, and we'll show the results.
Okay. Well, I think that is really wonderful news. I think the fact that 33% of you are in the process of establishing financial health metrics really kind of makes me proud that some of the, that the work that we're doing and that others are doing in this area is having an impact on what's going on out there, in the world of providers, and that another third of you are, want to establish these metrics and aren't exactly clear how to do so. Frankly, I hope this webinar will help you on that journey. And if not, absolutely reach out to us because I think that, we're very committed to helping organizations on that journey.
Wonderful. Thank you so much, Mindy. I am going to ask Aliza one other question that we got here from our attendees. Aliza, big question around insurance. What types of insurance would lead to a financially healthy customer, and is it based on coverage amount aside from type? Can you address that?
Sure. Insurance is an extremely complex area, and I will say in the Consumer Financial Health Study, we actually only touched on it extremely briefly, asking a question about life insurance, a question about health insurance, although at CFSI, we're increasingly moving into that area and doing additional deep dives and research. The SCORE questionnaire has a question around insurance, which is very broad because it's hard in, an 8-question survey to get, down into the details, but it basically asks people how confident they are that they have, sufficient coverages for an emergency. Now, what does that actually mean, right? That's pretty all-encompassing. We could be talking about health insurance, life insurance, disability, perhaps long-term care, auto insurance, and the person who asked the question is right. There's elements of quality. Do I have a high-quality plan? There's elements of affordability. There's elements of, do I have sufficient coverage for my actual needs and for my dependents? So all of that is critical for financial health. Certainly one survey question is not getting you specific answers on those, but it's meant to start to get to an individual's level of confidence of where they are to spark the conversation. Oh, you're not confident that you have enough insurance. I didn't mention homeowners, but that would be another one. Let's talk about, where you are in your life, what dependents you have, what assets you have, and what you might need, and think about the gaps between where you are today and what you need. Hopefully that helps.
Okay, so we talked a bit about measuring financial health, but clearly that is not the goal in and of itself. The goal is to improve customers' financial health, and your business has many levers through which it can do so. The most direct is probably the products and services that you offer. And so CFSI has developed a product quality framework, and once again, it aligns with our overall financial health framework. It goes far beyond examining the obvious factors related to a product, such as the price value or the transparency with which you discuss the product. For example, we look at questions like, are the products accessible to individuals who are struggling with your financial health? Do they facilitate users' planning and tracking of their spending, saving, and borrowing? Do they provide incentives to behave in ways that drive financial health? And how do they compare not only with common practice, but even more tellingly with some of the emerging innovations that are using technology and an understanding of consumer psychology to truly drive financial healthy behaviors? Armed with this assessment of best practices, we've actually helped clients develop product roadmaps that prioritize the most significant financial health gaps and opportunities that they face. And, products is obviously not everything. In addition to high quality products, well-designed processes, experiences, and other services, such as financial assessments, educational and advisory programs, can also be impactful. However, quite honestly, we've seen too many such programs fail to achieve behavioral change and outcomes. Our experience and a host of industry data have shown that successful programs really share 4 characteristics. First, they must be timely. Delivering information at moments of decision-making can provide immediate feedback that helps consumers better understand the consequences of their behavior. So, for example, low balance alerts can prevent a consumer from making a purchase that will result in an overdraft. And an email that links to an educational piece about ways to avoid overdrafts, delivered immediately after one has occurred, can be more impactful than the same piece delivered at a random time. Second, these programs must be actionable. So we've talked a lot about financial health scores. Providing a consumer with a disappointing financial health score without providing a suggested course of action can be demoralizing. However, providing the same score with a tailored action plan can be empowering. Third, these efforts must be ongoing. Any educator will tell you that repetition is the key to learning. Some forms of sustained interaction, such as financial coaching, are extremely effective, but they can be costly. However, we find that light touch approaches, such as repeated alerts and tips that are delivered electronically, can also be effective. These can include rules of thumb, such as pay down the loan with the highest rate first. This advice can be shared using actionable tools and using interactive chatbots that help customers manage even more complex financial decisions, such as the portion of their paycheck they can afford to save each month. And then finally, these kinds of programs are most effective when they're integrated with the underlying product. This allows consumers to put their knowledge into action. So at CSSI, we welcome the opportunity to partner with organizations that want to put these ideas into practice. We can help you build an effective financial health measurement program that meets your business's specific objectives and help you use those metrics to develop financial health improvement strategies. We can also help you understand the relationship between your financial health measures and traditional business measures such as customer satisfaction, profitability, and losses. More broadly, regardless of where your organization is on its financial health journey, we provide practical solutions guided by deep expertise and rigorous research. We have strong expertise in customer needs, product design and go-to-market strategies, customer experience design, fintech landscape, behavioral economics, and regulatory affairs. Our goal is always to help you understand the customer and navigate the landscape so you can deliver high-quality products and experience that benefit the customer while meeting your business objectives. And so now I'm going to turn it over to Brenton to see if we have any additional questions.
And boy, do we ever. Thank you, everybody, for submitting questions. A lot is around the logistics of this webinar. It is being recorded. We can share the slides with you. Please reach out to me directly, and I can share with you a PDF version. We did get a fair amount of questions to both Mindy and Eliza around some of the examples that we've seen in the market where we would deem them a high-quality product or offering, knowing that all providers cannot be all things to all people. Wondering if you could break out some of the more innovative examples you've seen that have moved the financial health needle. Mindy, let's start with you.
Okay, well, I'm going to actually start by talking about one of the programs that is out there, and then I'm going to turn it over to Eliza, talk a little bit about products, because Eliza has actually done quite a bit of work in these product gap analyses. So Eliza, I'll give you a couple of minutes to come up with what your favorite examples are. But one of the programs that that I'm looking at very closely, because it integrates a lot of what we talked today, is what KeyBank has just done with its acquisition of Hello Wallet. So KeyBank is a regional bank headquartered in Cleveland, and they have just put something into their online banking platform that generates that if a customer enrolls and provides their information from their other financial institutions. So KeyBank is trying to look beyond just their relationship with KeyBank to look at their total, their total wallet. They generate a financial wellness score using this information. In addition to providing the score for the individual, they provide peer scores to give somebody a good frame of reference. And the score changes over time, and they will give the consumer an explanation for why their score has changed. In addition, based on the underlying reasons for the score, it will direct the customer to specific tools and resources that the bank makes available. So again, I think it's a great example of taking the concept of a financial wellness score, making it actionable, and linking it to the kinds of resources that can again be very customized to what this consumer needs. And Elisa, I'm going to turn it over to you to talk a little bit about product.
Sure. Before I dive into specific examples, and this is a big question, and obviously we don't have a lot of time here, but I think part of the question was about how we think about quality. And for that, I would refer whoever asked the question to our compass principles, which is our framework for what does quality look like in financial products and services. I think there are so many high quality examples out there that we have seen, from innovations in savings to innovation in borrowing, things like setting up repayment of loans so that somebody is simultaneously saving while they are paying back the debt. I'll give you a couple of examples from our financial solutions lab. We saw things like rate rewards. So borrowers who perhaps are paying a higher rate because they, don't have prime credit, but they're responsible, and so they're demonstrating their creditworthiness by paying back, on time, consistently. Things like rate rewards can lower. Those types of incentives have the benefit of both lowering the interest rates for borrowers, but also lowering delinquencies for the lender. And so we've seen those be quite successful. We also see innovations in savings from a number of different places. Prize-linked savings is one that over the years has driven significant impact. There were some numbers that I recently heard about the program that Walmart has put together that I'm not going to remember, but it's pretty astounding, the tens of thousands of savers that they have, low to moderate income savers who are putting aside money for emergencies. We've got folks like Digit, a smart savings program that was in our financial solutions lab that is, working with low to moderate income Americans to help them save a really significant portion of their net income. And so we're seeing really encouraging statistics like that across the financial health spectrum.
Wonderful. We are at time. I'd like to thank everybody for attending today. I do hope you found the information useful and it has given you food for thought. Our contact information is on the screen. Please feel free to reach out to us if you have any additional questions or requests. And of course, if you'd like to learn more about partnering with CFSI. Thank you all. Enjoy the rest of your day.